IT Pro TV, an easy, entertaining approach to online IT training. Access over 2,000 hours of up-to-date, high-quality video content live and on demand for a free 7-day trial and 30% off the lifetime of your account. Visit itpro.tv/startup security and use the code SS30. Gain control of cyber risk with Tenable.io, the first vulnerability management platform built for today's elastic assets like cloud, containers, and web apps. Discover a fresh, asset-based approach that prioritizes vulnerabilities while seamlessly integrating into your environment. And improve ROI with the first elastic licensing approach based on assets, not IP addresses. Tenable.io delivers the data and context you need to secure your elastic attack surface. Start your free Tenable.io trial today by visiting Tenable.io. Welcome back, everyone, to Startup Security Weekly. Couple of quick announcements before we dive into it. Wild West Hackin' Fest is happening October 27th and 28th, put on by the fine folks at Black Hills Information Security. You can get hands-on hacking time at this conference. Is going to be a fantastic hands-on experience with all kinds of technology, including talks from Dave Kennedy, Deviant, Egypt, Chris Nickerson, Chris Gates, Mike Poor, Subt, and more. Check them out at wildwesthackinfest.com. That's HACKIN fest.com. And not just any con. Nope, it is AnyCon, the first hacker conference of its kind in Albany, New York at the Albany Convention Center. And it will feature a Capture the Flag competition, hardware hacking village, ping pong tournament in a family-friendly environment with several tracks available, including a keynote from Dave Kennedy, because he's everywhere. We love Dave. Security Weekly will be there. Doug White will be hosting Hacker Movie Trivia, giving away T-shirts and Hacker Movie-themed glassware. For $25 off your ticket, use the discount code Paul and visit anycon.info/tickets. Michael, what do we got this week on the news?
We're going to focus a little bit on growth, but by thinking about stuff a little bit differently. In fact, I was thinking, I've said the last couple episodes, I'm pulling things now and I'm trying to put them in, and I'm looking at both the quality of the questions we have coming in. And by the way, use your feedback. I got a note from one of our listeners this week that they've loved the show and just got a promotion and is looking forward to using that promotion to trying some of the things out and making some of those changes. So congratulations on that. And it's exciting stuff. So here's where it starts. It says the key to growth is illuminating your best bets. Here's what I like about it. It's illuminating your best bets. It's not saying figuring out your best bets. It's also not doing anything else. It starts out by talking about that we have constraints. And in those constraints, we've got to make the right decisions. Now, think about that for a second. Just pure play security for a second. We can't do it all. So our constraint is we have the team we've got the budget we've got the time we've got. How do we bring that together in a way that lets us get to the outcomes that we want? In fact, maybe not even the outcomes that we want, but the outcomes that we need to get in order to work properly for the entire organization. So what this is talking about then is how are we collecting that data in our decision making, and how is that then guiding our outcomes? And then are we willing to question and challenge that? And, look, this is obviously going to play to my interest in looking at things like what problem are we trying to solve? But, the other trend I've noticed, and I don't know yet if I was just getting ahead of this trend, if it's always been there and I only see it now, or if I have a wicked sense of confirmation bias, but I see this notion of the value proposition coming up a lot. Now, I detected it in interviews a couple months ago, but what's interesting is that they're talking about using a North Star, and theirs is use measurements, use these guiding measurements to get the data you need in order to make better decisions. That's your North Star. What's interesting is I've got some writing that I haven't released yet on value proposition as your North Star. The oddity is measurement for me doesn't come in until your value proposition transitions into full-blown straight talk. But at that earlier stage, it's the problem you're trying to solve, it's the value, and it's the impact. It's the de-risking it or the qualifier on it. So what's interesting in either way, however you do this, there's this notion too of, are you willing to step back and dispassionately look at it and say, am I asking the right questions? Am I collecting the right information? And are we acting on it the right way? And I think it's important because I see a lot of people dogmatically get into these cycles of, well, but I'm a smart person, and so therefore I make smart decisions, so why would I question any of it? And I find, frankly, I love questioning all of it. I'm willing at any moment, and this is probably not smart, but am willing, I'm open to blowing it up, blow it up, start over, try again. What did we learn? And what we just got in our interview was, how quickly can you move? What data can you grab? And how often are you reflecting on it? I think, Don and Tim suggest some of this, but I kind of liked it to a certain extent. The other part to this that I like to, and it's the top highlight. I'm going to quote it, but then I've got a different point that I want to make off of it. So this is the quote. Maybe that would have increased traffic to the site somewhat, but the number of bookings would have still been limited by the lack of the appeal of the photos. By keeping their focus on improving the ultimate goal of increasing the number of nights booked, they not only improved the rate at which people booked, but they also made any future increase in traffic they drove to the site more lucrative. A lot of people have at some point read or heard about Stephen Covey's First Things First, and we know about important versus urgent. And there's a nice 4-quadrant picture and everything else. I've started paying attention more to, we let a lot of things that are urgent and seemingly important creep into our lives, and especially our businesses, because we're always moving fast. And what this calls out is, if you've got that North Star, you've got that vision, you know where you're heading, then you get that opportunity to say, but is what this I'm focusing on, is this important? And if you can start focusing on those important things, you level up to the things that you want to get to. And all I can tell you is in my own business in the last couple of weeks of doing this, I'm a lot calmer. I'm a lot more focused. I'm getting a lot more done. And, 60 days later, it's starting to pay off. So I think it's totally worth it.
I like the quote in this article that comes from Facebook's original growth team lead, who says, if you can't be extremely clinical and extremely unemotionally detached from the thing that you're building, you will make these massive mistakes and things won't grow because you don't understand what happened.
Yep.
That's
yeah. I mean, it's not your baby. When people, this is my baby, I'm getting no, it's not. No. I mean, I get the attachment to it.
Yeah.
I do. But you got to be able to distance yourself and look at it a little different. By the way, probably a good tip for parenting as well. All right. So this one was kind of neat. I'm curious more your take on it. So it says you got to start up on the right foot. You got to build a customer advisory board. All your experience, Paul, on the marketing side of things and the product marketing side of things, did you have a lot of experience around customer advisory boards? Did you interact with them a lot?
Yeah. The problem is it depends on who's on your board.
Yep.
I think it's important to diversify as much as possible. It's not like a silver bullet that's going to be magic and tell you what you need to do with your business. It's going to give you some great inputs from which you have to make good decisions from. So I think it's a good resource. I don't think it's as prolific as some people think, and maybe what this article kind of leans towards. I think it's, again, a great source of information, but that also depends on who's on your board and how you've structured it.
Yeah, and that's exactly why I put this in. I mean, it's one of these things that we come across a lot in the security space, and then when I ask questions like, well, who's the profile on your CAB or your CAB, and they're like, oh, well, this title. Well, no. You're talking to me titles. What problem are they trying to solve? How's that relative to the problem you're trying to solve? And that's the point I wanted to make about this is, so I like it. So if you're new to this concept, the idea is that a lot of vendors do this. A lot of security startups do this. A lot of startups do this. They create customer advisory boards. The idea is these are people who are customers, so they've already given you cash at some level, right? They've paid for the value that you can create for them, and ideally, they're promoters of it. They like it. And what you do is you reach out to them and you say, hey, I'd like your input. Now, what I like about this is when you're on the receiving end of this, it's somebody saying, hey, I'd like your input. Well, we like it when our voices are heard. It's a human need. And so it gives you that opportunity. Where I find a lot of these things struggle is, to your point, Paul, it's the makeup of the board. It's also how you engage people. It's the structure of it. Oh, we're going to bring everybody together. We're going to wine them and dine them. We're going to talk about the new product features and see what they say. Really?
No.
Okay.
No.
Well, let me know how that works. As opposed to...
I think a smaller percentage of the time, and this is one of the more difficult things, depending on what stage you're at, is you might need to take your customers' feedback and not do what they say, but do something different that you've anticipated that they're going to need in the future. Like they may not know they have this problem. They may not know that they can solve that problem in some new way, but you can kind of glean that. Like all my customers are talking about X, Y, Z, but I really think that it's going to change and they're going to need to have ABC to solve, these problems in the future, and that's what I'm going to go build. Now, certainly companies have taken that to an extreme, right? Like
Yep.
Apple tells you what you need. And that's an extreme example, and you have to understand not every company's Apple. However, in security, I think in any industry, it's okay sometimes to buck the system, and kind of goes back to our previous article about making the right decisions. It may not always be the most popular one in the beginning, and that's some of the things you have to take with a grain of salt of your customer advisory board.
Yeah, and that's also where I think actually a customer advisory board works well, is that and this is going to bleed into that next kind of a thing, but this is why I always ask the question: what problem are we trying to solve? And if you're asking that question, here's the triplet that goes with that. How did you identify the problem? Is it properly isolated? And did you elevate it? So, if I ask somebody what they think the solution to the problem is, they might have it. It might be awesome. But I think what you're putting your finger on here, Paul, is if we always say, well, we should just ask everybody else what they want. Look, the famous thing is Henry Ford saying, if I asked them what they wanted, they'd say a faster horse. Mm-hmm. The problem is, as you've pointed out, and as Don and Tim pointed out, there's a balance to it. Yes, I do need to hear what people want, but sometimes their wants need to be transmitted or translated into, right, but what's the problem they're actually trying to solve? And it takes going a little bit further with it. So I wanted to put this out to say, I think it's useful. And keep in mind then that if you're invited to serve on an advisory board, I would ask some questions like, what's the structure? What do you expect of me? I mean, they had some stuff in here I thought was good because, frankly, the companies that do this, it's not like they're going to give you a discount on stuff or that they've got money to pay you. This is about you get to learn a little bit about their business. You get to learn a little bit about your own business because you're going to ask some questions and help them. And they had a phrase in here that I actually really liked. I'm going to let me find it and quote it. Once we launch, you're welcome to merchandise your CAB membership on your LinkedIn profile, resume, etc. Merchandise your membership. I'm going to steal that and use that again because it's a great way to put it, but I think it's valuable. So keep in mind that if you're building one of these advisory boards, that's great because you've got something of interest to offer to people. And if you go to serve on one, you should ask the questions. Can I put this on my resume? Will you write, if I've provided you value, will you write me a testimonial or an affidavit to my value to you back? I think that's really good. That said, I think you started right at the top of this with just, is this a panacea? Nope. Silver bullet? Also, nope. Interesting? Yeah. But rush right to do it? I don't know. Have something first and then go with it. Which leads us.
I like this next article about thinking. I think the article's a little all over the place, but I get the general. Did you get that sense too?
I was going to say, I put it in here because I really liked it, but think until it hurts. It's also read it until it hurts. Yeah. Then come back and read it again. Yeah. And then eventually it might not hurt so much. But and in fact, some of it, it's also a little awkward. You're spending money on stuff, but what is it? But one thing I have almost never seen or heard of is a founder exhaustively using the one relatively unlimited resources they have, their own thinking. So then maybe I am different, but I can't seem to turn my damn brain off. Yeah. So, but what they're talking about, and I liked, was getting into focusing on the product. And I'm going to take it a step further. And this is the phrase that captured me. I sincerely doubt that 99% of people in the world who have a potentially promising entrepreneurial idea even take one step, even the step of jotting it down on a Post-it. And that for me was both crushing and exciting. I mean, I have pads around the house, and there's a rule. If my hand goes up like this and I'm by a pad, everybody knows, just be quiet. Daddy's got an idea. He's getting it on the paper. We're just going to leave him alone until it's all sketched out. And sometimes, I might sketch for a couple minutes and a couple pages. But I know that. I've talked to people. Paul, you've talked to people. They've got ideas. They won't write it down. They won't act on it. They won't do anything with it. And I went, oh, okay. It's a fair point.
Well, and also I think the article speaks of how you have to think about I think what it's cautioning is, hey, I've got an idea for the next best thing. Let's just go rush in and do it. And they haven't spent that time, jotting things down on a napkin or cardboard. I jotted ideas for our current startup, on a piece of cardboard, in my workshop while having a cigar kind of thing. And I think that's an important exercise to go through. I think it's important to, like you're saying, think about those things, flesh them out. And I like his idea, couple that with reading, right? And I do that all the time, right? If I have an idea, I want to go read about that subject and get a general lay of the land. And I like his advice too, like read until you start seeing some repeating themes. Now you get a really good sense of that. I have to say, I go through a very similar process that he somewhat outlines in this article when I develop like a presentation, for example, right? I want to explore all those ideas. I want to write stuff down. I don't want to get stuck. I don't want to be staring at a blank slide going, I don't know what I'm going to write, right? I back up, I write a ton of stuff down. I read a bunch of stuff. I copy those links into the document, and then I move on from there. And since I've started doing that, I find I have a much better handle on creating that kind of content. And I think it's very applicable to your startup.
Yeah, the best part of this is that writing. What's interesting too is you already pointed it out. Read until everything starts repeating. I actually find the same works with writing. Write until you keep repeating yourself. And I don't mean it like, so on Monday I wrote this, and on Tuesday I wrote this. I mean like right now I've got a folder of ideas, and I'm starting to come up with a better taxonomy to it. But like if I've got I'll riff on it. I'll take 5 minutes, I'll riff on the idea, I'll type it up, or I'll scan it in or whatever, and I stick it there, and then it'll bubble up some other time, and I'll write about it again, and it'll bubble. And then what I've started to notice is I now take time every week, and I kind of go through and I regress all my new notes and sort them. And when I get to a point where, oh, okay, the theme tightened up, I get it now, then I'm like, okay, time to act on it. And so what's cool about this, and same thing when you're doing a presentation or anything else, is like there's a need for structure because structure reveals that substance, but then there's also an opportunity for just write. Right. In fact, there's a quote, I don't remember who to attribute it to, but it's like, I don't know what I'm going to think about something until I write it. I can't tell you how often for me the answer is sit down and write. Yeah. Not, or go for a walk and talk to yourself, which I also do. But writing really opens it up. And that's that thinking. And then sometimes share that writing, and it'll all start to work out. So anyway, I thought it was a good idea.
Absolutely. Yeah. And I do the same thing I just write the outline. And sometimes I'll write a paragraph, and then I'll write another paragraph that's really close. And I just keep writing, and then I just go back and refine it. So yeah, I think it's good advice. Absolutely.
All right, financial modeling. I put this in. There were two things on this that I really liked, but then we'll go anywhere you want to go with it. First of all, is I think it's an important thing overall. Here's where I was like, yes, we're totally putting this in. It basically says, please don't just download a model and run with it. And what's interesting is I had actually just sketched out something about, I've been asking a lot of people how they develop their value proposition, for example. Number one way, Paul, they go type in value proposition on Google or something, and they look at somebody else's, or they get a template and they try to answer like even take my 3 questions, right? What problem do you solve? What value do you create solving the problem? What impact is your solution? Yeah, those are outcome questions. And so you have to kind of go through a bit of more of a process, and it has to match your particular business. That you don't have to answer all my questions exactly the way I'd like you to answer, because you got to answer them the way that they need to be answered. Same thing here. So I went, oh, okay, I'm in. I got it. Like, you can't just tell me, well, this is how some other Silicon Valley company did it, so we're going to follow the same model. And so what's great then is that they really laid it out. And I really like this idea too. They'd asked to be sent a copy of the model, and I'd refuse. I would only share it by first sitting down with them and an associate and reviewing the model in person. And after that 90-minute session, I would leave them a copy of the model to play with further.
Right.
Boom. Solid.
Yeah, there's some foundational things that have to go into your financial model, but ultimately, it's kind of like security in that it's going to be custom for your company and your organization, right? And it's a difficult exercise to go through, especially for me, because like you have what you think is a good idea, right? You're learning how to execute it. You're understanding the market, and then at some point you got to sit down and like plug numbers in and talk about like, what am I going to charge? How fast am I going to grow? Where are all my costs? How do my costs change as I grow? And all of those things. And I think it's a difficult thing for a lot of entrepreneurs to go through. And I think one of the things that is important in this article is it says, well, investors care about your financial model like a lot. So yeah, it's important.
Well, yeah, think about that. You're an investor. By the way, go ahead and say you're a security leader. Maybe you're Kevin, you just got promoted, and now you've got a budget. The answer isn't, hi, I've written you a check. Good luck. Hope it works out. Somebody in your organization wants to know, did you spend the money wisely? Did we get a return at all? And I get it. There's always going to be an argument about return on security. Let's save that for another day, and I'll prove to you definitively it's always possible. But let's set that aside. Yeah. Paul, if an investor is coming to you and giving you money, what they want to know is not, will I get my money back? Will I get more money back than I gave you? yes, maybe we'll solve problems and advance the industry and do all sorts of great stuff. But fundamentally, they're giving you money, and they want to know that you're going to do something with it that gets them more back. You've got to show them how to do it. And I love the way they ended. The only thing we know for sure about this model is that it is wrong. But if we look at it critically, we can better understand the drivers of the business and what we need to be focused on to reduce our risk. Yep. There you go. So there's 4 more parts. As they pop up, no, they're all there. So you can check them all out. It takes you through it, and it talks about the importance of cash. Cash is king, and that's one of the things I think we're going to keep talking about on this program. Is in fact, we've got some stuff coming up that'll keep speaking to that as we kind of go through it. But anyway, that's what I liked.
Awesome.
Marketing automation. What's your take on marketing automation?
I think I just threw up in my mouth a little bit after hearing that term.
Well, I mean, look, it's
the same. Well, you know what it is? It's the same parallel that we talked about in enterprise security in a security context. That automation is great. However, you need people, process, and technology, and then think about how to automate those things together. And I think that a lot of people are like, oh, well, I can just use marketing automation and all the stuff will be automated and I won't really have to worry about marketing that much. And that's just wrong. It's just wrong. Again, it's people, process, and technology that needs to be behind your marketing program. And certainly you're going to automate pieces of that. But I think of marketing more, and this is just my background perhaps, I think of marketing in the form of campaigns. And sure, there's automation that goes into implementing those campaigns, but campaigns need to have goals. They need to be able to measure those goals. You need to understand your audience. You need to develop the messaging for that campaign. And that's really what I think needs to be behind your marketing, whether you're a startup or whatever kind of business. And again, automation can help you, but you need to have people and processes in that mix.
I'm going to agree with you 100%, and then I'm going to offer a slightly different take on it, along with your idea. So we've all been subjected to, and in our industry in particular, disdain that, here, I'll give you this free download, just give me your email address. And we cringe because we know that we're just going to be hit with a barrage of email messages. And some of them try to be cheeky and some try to be funny. Some just completely miss the mark and make us scratch our heads. And that's all like that marketing automation. So if you just look at marketing automation on its face, and if you're new to this concept, it's what happens with marketing automation. And a lot of times it's marketing email automation or that type of stuff. What happens is you get put into a system or a funnel or a flow or whatever they want to call it. And they send messages on certain days and they tie it to certain actions or certain campaigns and whatnot. What I've learned over the last 10 to 15 years of looking at stuff like this is if you're pretty unfocused as a company, that's going to just piss people off and make them mad. If you're exceptionally focused as a company, this can play a role, but you've got to understand the role that it plays. If you're selling something that's high end or high touch, people don't want to be turned off into something that's pretty obviously automated. Now, I'll tell you, because this is a space I follow, there's a lot of, I don't want to call them tricks. There's a lot of ways now that people are personalizing these. I think it was the CEO of Highrise, right? So that's a 37 Signal stuff. They actually change their templates daily. Now, their volume is so high that for them it makes sense. But like, I like what you said, and if we take your advice and put it into this, I think this article gets elevated. Do you have a goal? Do you understand the outcome? Do you have a way to measure it? Yeah, cool. Because if you think about it, then somebody is going to find you and they're new. Are there a certain set of things that they'd like to know? Is there a certain journey that you can lead them on that doesn't require a lot of touch? And then if they level up, yeah, then they switch out of that into something else. I think that's where it makes a lot of sense. And it kind of makes that point here. I just don't think it makes it as well. If you have like a, hey, you're new to me kind of a thing, and there's a welcome and you've practiced it and it's thought out and it's distilled and it makes sense and it's creating value, then I think this is great because especially as a startup, you can't do it all. But if you think the answer is I'm going to just create this funnel and magically people are going to show up and give me money, yeah. Good luck with that. I don't think that'll work as well.
What do we have in startup and security notes of interest this
All right.
week?
Well, we got 3, but I want to start with this one. Bain Capital Ventures is going to fund angel investors. All right, so here's why this is interesting to me. This is purely Michael's take on it. I didn't get a chance to talk about this with a lot of the people in the industry yet. If you're watching, you want to talk about it, reach out and I'll have this kind of a conversation. But so typically what we'll see is you have these different funds, right? And typically what will happen is you're an investor, you're private equity, you're whatever, you've got some pile of money to invest in these different types of startups. And whether you go to demo days or pitch nights or you've got your own network, you go and you find somebody, you invest in them. One of the trends that we've been talking about for the last year is, what does that seed round look like? Is it $500,000? Is it $500,000 and less? Do we see seed rounds of $1 million? And we've seen seed rounds now up to $2.5, $5 million. Those tend to be outliers, but there seems to be an acknowledgement that the trend in that level is going up. Then we get to your Series A and stuff. But there is a pre-seed in a lot of cases, and that's your angel round. And so what's interesting about this is that Bain Capital Ventures said, okay, you know what we're going to do? We're not going to give the money to the companies. We're going to give the money to the angel investors. And so I'll quote, the early stage investors, often the first source of capital for startups, providing a relatively small amount of money. Yeah, like $5,000 to $50,000, $5,000 to $100,000. They also tend to be, now this is not always true, but in the Southeast, they tend to be somewhat geographically related to where you are. They tend to have, think about some of the investors we brought on our program. They know the security space. So they're angel investors. They're looking for things that solve problems that they understand, language that they get, things that they can see a bigger picture on. And so they'll put 20, 30, 50 grand in, maybe more. As an angel, they take a higher percentage of equity or expect a different type of payout, but they're taking a different type of risk. And so I looked at this and I went, oh, that's interesting. Because, and I juxtapose it with this. If you remember a couple of weeks ago, we had this story too that said, once Amazon, like AWS came along and all of these cloud-based services came along, it got a lot cheaper, easier, and faster to launch a startup. And so what we saw was more of a spray and pray. VCs would throw cash at people faster, but they weren't necessarily giving them the coaching, the guidance, the counseling, the mentoring that typically went along with it in that seed stage. They'd kind of wait and see at the end of a year or two who survived, who did what. Oh, that's fine. I never would have thought that kind of a startup would survive, but it did. Great. Okay. Well, now we'll give you more money. Oh, and by the way, so-and-so is going to be on the board and we're going to help you this way. And now you get access to us. And I'm wondering if this isn't a way to say, it's almost like crowdfunding, crowdsourcing, but a little more structured, a little more disciplined, a little more focused on the problem that they're trying to solve, which is, how do I find better companies faster? So instead of me trying to do it, I'll give the cash to somebody else trying to solve that problem. We both win, and then I've spread my risk out further. So the second part to that then is that those angels get that opportunity to do, because I find a lot of angels enjoy not just investing, but they enjoy that guidance. They like that vicarious energy, that touch, that rush. I'm just kind of curious how this will work. Thoughts on it, Paul?
Well, I think you're going to have mixed success in the various angels. I think you're going to, the ones that are awesome in security, if they get more funding, I think are going to continue to be awesome, right? I think it's really going to depend on the angels that they're investing in.
Yeah, so it says here, Bain Capital Ventures will not dictate where angel investors direct the money. It will not have access to proprietary information about the startups. The hope, though, is that by developing early on with startups through investors, Bain will have a better shot at directly investing in those startups down the road. It's pipeline. I think it's smart. I think it's a good development. And I think you and I should have Startup Security Ventures.
Yes, I was thinking the same. I'm like, I want to get in on this train. This is good.
We should be angel investors.
Yes.
And we can help some of these companies out. So maybe in our year 2, we're gonna grow up a little bit. Let me skip over.
I was gonna say, what's your take on Tanium? Because I saw this.
I think it's a little longer. Let's touch Microsoft fast.
Okay. It's
still rumored. I haven't seen it confirmed, but I've seen it from so many freaking sources. So Microsoft bought Hexadite $100 million, and Hexadite. Let me find it.
Security orchestration and automation.
Yeah, and so
yes,
this is the direction.
Yep. So they compete with Phantom Cyber in those. Yeah, and I think it's a great move for Microsoft. I think if there ever was a software company that could benefit from acquiring this technology, certainly Microsoft. Microsoft needs it.
And from what we can tell, it looks like Hexadite had raised about $10.5 million from investors. So if that payout's accurate at $100 million. It's a 10-time return. And again, right, that feels like a high multiple. And then you look at it and you go, right, but Microsoft didn't have to put that in their labs.
Right.
Microsoft Ventures doesn't appear to have been part of it, which is interesting because
Yeah.
Microsoft Ventures is going strong, including offices in Tel Aviv. But it seems like this is the new thing that we're looking at. You're going to get a multiple when you get acquired by a private company. So I thought that was interesting. I thought it was worth bringing up. All right, Tanium. So Tanium raised $100 million. It puts their valuation at $3.75
Now, they
billion.
said that valuation was post-funding. What does that mean, Michael?
So they had recently said that they're going to do an IPO, and then they just took another $100 million. That's
okay.
very
I gotcha.
uncharacteristic.
Yeah.
So what's happening then is that, and what they said was, well, you know what, we're still going to IPO, but we need a little time, and we're going to kind of figure it out. And so this is going to let us figure some stuff out before we IPO. I don't have a lot of deep insight into this. I've been asked about it enough that maybe this weekend or soon I'll put some thought around it. But Tanium's catching a lot of news, and it's not good. Like Uber's in the news a lot lately, not good. Tanium's in the news a lot, not good.
Almost in a similar light, too, which is not good.
Yeah, it's bashing the culture. It's bashing the CEO. CEO came out recently and said, whoa, we're not a touchy-feely company, everybody. Get over it.
Yeah.
But they've had a defection of quite a bunch of talent.
Yep.
And if you talk quietly to people in the enterprise and you say, what do you think of Tanium? They go, yeah, I don't know. Like, I'm waiting to see what happens with it. So it's not like their technology is lighting the world on fire and it can't stop. In OPS, they've got some culture things. I think sometimes with these so-called unicorns is that there's so much money in them and so much money at stake. It's kind of like this old maxim, right? If you owe the bank a little, they don't care about you. But if you owe the bank a lot, you've got a lot of power with the bank because they want that money back. And I can't help but wonder if Tanium's not in that same kind of a situation.
Yep.
So those were the biggies. As I looked at it this week, as we come up on a holiday here in the U.S., things have a tendency to get a little bit quieter. A lot of people still dealing with the WannaCry fallout or lack of fallout, depending on your perspective on it. So that's kind of what we got. Obviously, I'll keep an eye on things as they may or may not heat up next week.
Awesome. I don't have any updates on my journey from last week, Michael. I don't know if you want to run through yours really quick.
It's just more subtlety on it. I've had a couple people compliment me lately, saying that the last 30 days they've seen me accelerate my growth. I've been getting a lot better at saying no to things and saying yes to the right things. I've been spending a lot of time trying to understand my ideal profile, and what I kind of figured out on a walk this week was I'm interested in people that want to do transformative things. Like I'm not working with broken people. I'm working with high performance teams that want to elevate that performance. They want to accelerate those results, and they're looking for ways that take that translation friction out. And it's fascinating, Paul. The more I talk to myself on that as I go through these walks, I've started walking every single day. I got to tell you, when you read, and we cover some of these articles about the importance of sleep, the importance of diet, the need to disconnect and get away, the opportunity to go out for a walk. I've been practicing those, and man, I'm feeling a lot better for it. So I'm on a good run. I had some stuff I had to take care of this week with a client, but the value prop breakdown, I mentioned this on the last show. I'm at the point now where I have a rubric for it that's got 18 points. I've got an outline. I've got a one-page overview. And this week, a lot of little things clicked into my head. Once we get through the weekend, I'm going to put that together. Those of you that have already scheduled time with me or asked for it are going to get it. And then there's a group of people I work with. I wouldn't call them a customer advisory board. Maybe I should. But I'm going to go work with them. We're going to work through it. And then I would say within the month or so, it'll be a resource I'll give away. People can get full access to it, figure out how to make value prop work for them better. So that's it. Got back on writing. I've been doing a lot of stuff around the cyber insurance. This week, I'll tell you something, if people want to go look at it, it's been a lot of fun. I talked to a risk manager. They wanted to remain anonymous, and I appreciate that given their type of business. Paul, they had no CISO. They didn't really have a security program. They had an IT group, and their business fundamentally took a shift. And one of the things that happened from their insurance coverage was they said, P.S., cyber is excluded. And the risk manager said, well, what does that mean? And it was almost like a 2-year journey. Ended up quantifying all of their risk. It created the need for a CISO, a security team, a counsel. Like, it completely transformed their business. So a lot of times I still see people in our industry will look at insurance and go, oh, that's a sign of failure. That's looking at cyber liability insurance, and it's frankly kind of a bad attitude on the part of the companies. And I get then why security people look at it that way. But then I've got one of the carriers coming up next week telling us, and they're answering the question, do we pay out or not? They've given me some data on that. Here's the thing. I've learned so much. I thought I knew about cyber insurance before I did this, and I have completely different perspectives on it now. So it was kind of fun. It was interesting.
Fantastic. Well, Michael, thank you as always for this episode of Startup Security Weekly. That will conclude our program for today. Thanks everyone for listening and watching. We'll see everyone next week.